Hello, it's Thursday the 29th, I'm FX Plu and this is CurrencyTransfer.com's market update. The headlines today are that the Bank of England warns of no-deal chaos, Powell hints at a rate hike pause, and the weaker IFO data points to longer-term weakness for the euro. Mark Carney discussed this year's stress tests yesterday, where the Bank of England tests the solidity of UK financial institutions. The reference points he used were very similar to the 2016 test: a sharp recession, 9.5% unemployment, GDP down 4.5%, and a housing market crash. But he was keen to clarify these do not represent the bank's base case for next March. However, uber posho Brexiteer Jacob Rees-Mogg thought otherwise. He said that Carney is a second-tier Canadian politician who failed to get a job back home. That's harsh words from Jacob. Sterling remains range-bound, with traders unwilling to push it too far in either direction as the vote looms. And yesterday, cable traded between 127.30 and 128.45. The pace of US rate hikes is set to slow down in 2019, and the December rate hike is now far less certain, following a speech by Powell yesterday where he said the Fed fund rate is now close to neutral. This sent the dollar index into a dive down to 96.70 and saw a 600-point rally in the equity markets. We've seen two FOMC members help boost the dollar earlier the week by supporting continued rate hikes. So this could add a little bit of spice to the December Fed meeting. Over in the Eurozone, the IFO Business Sentiment Index continued to decline. That's the third month in a row now. And concerns are creeping across the Eurozone about the ECB model to ensure growth and stability. Eurozone monetary policy has been accommodative for many years now, and even the region's largest economy has slipped into decline. That lack of growth is a concern for the euro. Euro dollar has lost 10% from high to low across the year, but exports have not seen any real growth as a result. Inflation is a growing concern in Germany, and further euro weakness will only make that worse. That said, yesterday euro dollar rallied slightly to 113.85 as the dollar sold off, but the risk of longer-term structural decline remains firmly in place for the single currency. Cheery note to end on. Have a great day.